Hello, good evening, friends, and welcome to Sky High Symposium session 30. And we are happy that we have hosted 30 programs in this year. Still, the year is going on, and entire WMEC is working very fine. The secretary, Shanu Goel, and everyone. And we are happy that we are able to give the opportunity to all our women members as a speaker. All our speakers are excellent speakers. And today we have CA Jankana Thakkar with us, and will be going through us Income Tax Act Section 194R, very important provisions. And Rajalakshmi Madam Ji will be going us through the NPOs, the special emphasis on Section 12A and 80G. And these both topics are very important. And Shraddha Madam is there coordinating this session, and all my wonderful and intelligent ladies. This is our endeavor to serve the best to our women fraternity. And you all are welcome to be as a speaker. This is the platform which is provided to all women members of ICAI. Let it be from any region. And friends, let me tell all of you, the coordinators are also doing wonderful work. So I invite all of you as a coordinator also. Again, today our chairperson madam is not there, Shri Priya madam. However, she is also doing wonderful work, doing a lot of other activities in the institute relating to corporate laws also. And friends, if you find, again, we have completed our one of the largest event, that is World Congress, and with the highest ever successful so far in the history of IFAC also. We had 10,000 participants and 6,500 in present physically and 3,500 on virtual mode. And this is all because of the energy, positive energy, which all of our members give to us, and which keeps us rolling and working and active all round. And today Shanu madam is there with her fullest energy to ensure that we reach to 100th Sky High Symposium. This is the 30th, 30% is over, and we will very soon complete in this current term only the 100 series, and we will achieve that. Friends, with this brief, I give the charge to the coordinator, and I wish you excellent session to today's excellent sessions. Thank you very much and happy learning.
Thank you, Preeti ma'am, for the wonderful words. The first speaker of this beautiful evening would be, especially on this 30th November, would be a very enlightened person, CA Jankana ma'am. I would like to give a brief write-up profile about her. Jankana ma'am, she cleared her CA in 2011 and working with Deloitte and Haskins. She's a tax expert both in domestic as well as international taxation. Prior to Deloitte Haskins, she was with another CA firm, and she has got a very impressive this thing. So I please bear with me. It's going to take about 5 minutes. So she is a nominated co-opted member of International Taxation Committee of WIRC of ICA for the year 2021, 22 and 22-23. She's also a core committee group member of Direct Tax Committee of Bombay Chartered Accountants Society, and contributed in BCA's budget publication and in WIRC ICI. She's also contributed articles for Chamber of Tax Consultant Journal as well as BCAC for various topics, and authored chapters for Chamber of Tax Consultant books. She's also given various presentations in WRIC, BCAS, then Kalyan CP Study Circle, Women Empowerment Committees, and there are various articles, publications that I would like to read out, but I would like to give the podium to ma'am, So please, ma'am, Jankana ma'am, please start this session without much ado. We are just waiting for a very important topic and very relevant topic, 194R. Over to you, ma'am.
Yeah, sure. Can you see my can you see my screen?
Yes, we
Yes,
can
ma'am,
put
we
on
can see.
presentation mode.
Uh-huh.
Yes, please
Yeah,
go
we
ahead.
can see, ma'am.
Yeah. So thank you so much for giving me an opportunity on section 194R. These are TDS on benefit or perquisite arising from business or profession. So this section has a very much history because of section 28(4). Why it was introduced? Because there was a practice of providing benefit requisites to business, collection and stakeholders. Employees were providing to its employees. Business houses are providing to its customers, suppliers, and other important connection in the supply chain. So if you see that traditionally where the payments were made in cash, partly in cash and partly in kind. So before getting into 194R, it is better to first to discuss 28(4). So 28(4) was there in the Act since 1964, and the interpretation received on the words contained in 28(4) it is much of relevance. So the object of the amendment was to bring through taxable benefits which are obtained by the SEC as a quid pro quo. Now, what is the meaning of quid pro quo? It is a favor or advantage granted in return for something. So you are doing something, we are favoring to you. So likewise, the companies, business houses are giving to their customers, suppliers, and their important connections, and which were received by the SEC as a de facto consideration for services rendered. So what is the meaning of de facto? Existing in fact. So it is not necessary, it is legal binding of the law. So it is not mandatory for the company to give the benefits of perquisite, but it is given as a favor or advantage which the SEC has performed. Okay, so the controversy was there on the non-reporting of the receipt of the benefits in the return of income by the recipient, which were leading to the furnishing of incorrect particulars of income, which was mentioned in the budget speech, memorandum, etc. So 28(4) and 194R couch the identical language, and memorandum to finance bill, it start the discussion referring to section 28(4). So before moving ahead, I have just mentioned here that it is pertinent to note that the principle that when there is a case of no income at all in the transaction, then the requirement to deduct the tax that does not arise. That is a basic thing which we have learned till date. So which is coming with the section 4(2), 190 and 191 of the Act. If you read the section 194R, it read as any person responsible for providing. So if you see all the sections which says any person responsible for making payment. So here the section is using the word any person responsible for providing to a resident any benefit or perquisite, whether convertible money or not. Now, first, it should be the responsibility of the person, and second, it should be arising from the business or profession. Both should exist, then only this will fall within the ambit of 194R. By such resident shall, before providing such benefit, as a case may be two such resident. So it is transaction between resident and between the transaction between the domestic transaction and not the transaction between resident to non-resident, because section 195 is already taking care of it. So ensure that the tax has been deducted at the rate of 10%, provided that in case where the benefit of perquisite, as a case may be wholly in kind or partly in cash and partly in kind, but such part in cash is not sufficient to meet the liability of tax, deduction of tax in respect of wholes of such benefit or perquisite, then the person responsible for providing for such benefit shall, before releasing the benefit or perquisite. So it means they are saying before you give this benefit, before you release this benefit, you have to ensure that you are withholding the tax and depositing the tax with the government. Now you read this language of section 28(4). It says that profits and gains of business or profession, the value of any benefit or perquisite, whether convertible into money or not, arising from business or exercise of profession. So if you read the 28(4) year starting says the following income shall be chargeable to income tax. Now, if the memorandum says you have to refer to 28(4), but the circular says, if you read the first circular, very first circular, which says that it is irrespective whether it is a recipient income or not, you have to withhold the tax. So it is not necessary the income, whether it is chargeable to tax in the hands of the recipient or not, but you are obliged to withhold the tax. It is mandatory as per section 194R. So this, I have reproduced the language of memorandum, finance bill, and the finance minister in the budget page, what she has stated. Now, what is the meaning of benefit? Now it has not been given. Allahabad High Court has discussed the meaning of benefit, which says that the word benefit has not been defined in the Act. It is therefore permissible to resort to the dictionary meaning of the word. The same is a natural advantage or profit, which includes a monetary advantage or monetary profits. So what they are saying, the SSC could either utilize this was a case where the Allahabad High Court has discussed the benefit. SSC could either utilize the import entitlement for itself, sell the same in the market, and obtain the monetary benefits. If you use that important entitlement for your benefit, if you get any incentive from the government, so that will also come under benefit. Or if suppose if you sell that entitlement to someone else, say DEPP license you are selling to some other person, so still it will be covered under the monetary benefits. What is the meaning of perquisite? Mumbai Tribunal in case of the Helios has stated that the word benefit or perquisite have been used in this subsection have to be read together and would draw color from each other. Normally, the term perquisite denotes a meeting out of an obligation of one person by another person, either directly or indirectly, a provision of some facility or amenity by one person to another. And from the very beginning, the person providing such benefit or concession knows that whatever is being done is irretrievable to him. It has been granted to a person as a privilege, right of that person. If suppose insurance company is giving any benefit to the manager of the banking company, and that manager is getting that benefit of say leisure trip, so it could be covered under as a perquisite or it could be covered as a benefit, but it is as a privilege they are giving it. They are knowing from the day one, if you meet this target, we will be giving you this benefit. In this view, the matter word benefit has also to be interpreted in the same manner. At the time of the execution of the business transaction, one party should give to the other party some irretrievable benefit or the advantage. So it should not be cancelable. That like once I will give you the trip, I will be taking back. So it will be like determined that if you're meeting these targets, you will be eligible to receive this benefit. So this is the snapshot of the newly inserted withholding tax provision. It says that it will be applicable from 1st July 2022. So that what will be the timing of withholding tax as we discussed, it will be deducted before releasing the benefit and perquisites. Compliances should be followed. So I'm not getting into this. This is just a ready reference for you to discuss with your clients. Non-applicability. There is an employer-employee relationship exists to give this benefit, then 192 there section is there to take care of it. So 194R will not come. If the recipient is a non-resident, 194 is there. Some chargeable to tax, it will be taken care accordingly. If the benefits of requisites not arising from the business or exercise of profession of the recipient, then it will not be. So it is necessary that both the limb of transaction should be covered, then it will be fall under within the ambit of 194R. If the benefits of perquisites are provided to a customer who does not engage in the business or exercise profession, like banks are giving a reward points when we swipe the card. So that reward, or we are getting that points which we are redeeming either into cash or the Amazon voucher which we are getting. So the bank is giving to us, but we are not into that business or profession. We are going to a merchant to swipe our card. So it is if any merchant is getting benefit from the bank, so then they will be covered because they are into that business or profession. But when we are swiping the card, we are the customer, we are not into the business with the bank, so we are not covered into. So bank are not required to withhold the tax when they are giving us any points or any redeems on any benefits on our credit cards. So this list is not exhaustive. When a person gives incentives in the form of cash or kind, such as car, TV, computers, gold coin, it will be applicable. When a person sponsors a trip for the recipient and his or relatives upon achieving certain targets, when a person provides a free ticket for an event, gives medical samples free to a medical practice. Now 194R is an absent entry 197. Till date, there is no amendment in 197 for the lower deduction. So then we cannot take a help of section 197 while applying section 194R. Other cases, in case the benefit of perquisites paid in cash or cash in kind, both in cash is enough to take care of 10% TDS on whole value. Now, before discussing this, if you remember, there's a Supreme Court decision of Mahindra and Mahindra, which clearly says if benefit is in cash, that 28 it will not cover under 28(4). But now 194R circular is overriding the principles given by the Supreme Court of Mahindra and Mahindra. Hence, we cannot advise the client that TDS is not applicable if we are giving any cash benefits to a customer or to their agents, because it will be litigative, because circular case is that it will be covered. So for example, if 1 lakh cash has been given and Baleno car has been given by a pharma company directly to an individual doctor, the pharma company has to deduct the TDS on 1 lakh cash plus 8.5 lakhs. It is at the rate of 10%. 9.5 lakh, that will be 95,000. A pharma company shall pay 5,000 ka cash after deducting 95,000 as a TDS from 1 lakh rupees. Now, CBDT circular, what if suppose we don't have sufficient cash to meet the TDS? In that situation, the pharma company won the TDS and pay to the government and recover from the doctor. Now this circular is given the two scenarios, two situations. If tax cost is to be borne by the ABC, the withholding tax done by ABC on its own, after grossing up benefit of perquisite. If suppose there is no sufficient cash, then the person who is making a payment has to gross up the benefit of perquisite before withholding the tax, and accordingly report in Form 26Q. If tax cost is not to be borne by the ABC, then he has to obtain the declaration from the deductee, from that the payer, that you have deposited tax in the form of advance tax, and that all the details should be mentioned in filing the withholding tax return in Form 26Q along with the challan number. Moving ahead, which sectors are impacted impacted? I would say almost all sectors are impacted. Financial service sector, insurance service sector, technology, media and communications, tourism and travel, FMCG and consumer durables, infrastructure and real estate, and the automotive industries. But if you are dealing with any of this sector, we have to also follow the regulations such that client should not get stuck while complying the one law. They should not get stuck in the other law. The reason why I'm mentioning is, for example, in case of the insurance service. Now, as per the IRDA, I think in August 2022, there is uh, uh, some draft notifications as well as this, wherein they have mentioned that insurance companies cannot give more than 20% commission or benefit to their intermediaries or their agents. Now, we suppose if they are giving any kind of these benefits, perquisites or benefits, and they are not complying the IRDA, so then you have to guide the client that, boss, if you are following any kind of this benefit or perquisite, suppose you are giving any benefit or perquisite and you are saying that it is not in the nature of commission, but as per that IRDA, it is in the nature of benefit or perquisite and it is indirectly related to a commission. So then it could be possible IRDA may treat that benefit or perquisite and trigger that if you have not complied the IRDA provisions, then even though you deduct the TDS on that benefit or perquisite, but you are not complied the IRDA provisions, still after deducting the TDS, it will not be allowable expense under section 37(1) because it will be treated as the non-compliance in the other law and it will be the illegal expenses as per the other law. So while advising the client, you have to be aware that if it is falling under benefit and perquisite, you relate these expenses into the other laws also while advising to a client. Now, potential impact on the pharma companies. If they're giving a stockist margin discount to our distributors, rewards and incentive schemes, distribution of medical books, journals and periodicals, referral fees, always considerations, sponsorship for conferences and seminars. So this I will be discussing later. So these are the nature of expenses which is mentioned for the pharma companies, but it is also relevant for the other companies as well. So like books and periodicals, sponsorship for the conferences. What all will be covered under the conferences? Whether any goodies are given in the conferences will be treated, because in the latest circular which they have mentioned, the conference, pure conference expenses, and if it is required for the relevant product, for the giving a relevant training for that product, and you are arranging a conference, then it will be out of the scope of 194R. But what if during the conference you are giving some goodies, giving some gifts? So whether it will be covered under no. So strictly speaking, if they are giving it in the goodies, which in the 194R, which they are saying you have to allocate that expense, whether it was related to the conference or not, and then you decide whether it will be 194R or not. But frankly speaking, there is no methodology been given how to allocate that. So it is advisable to withhold the tax to avoid the litigation, because the risk appetite is very less of the companies to debate before the authorities. So I will be discussing this detail considering the issues which I will be discussing in the later slides. These are the various business situations I have mentioned. Gifts given to the distributor or dealers, either directly or through the third-party managed portal. So yes, it will be covered. Gifts to the ultimate consumers. So if the consumers are not having any business and profession relationship with the person who is giving the gift, then 194R will not get triggered. business conferences, which we discussed just now, out-of-pocket expenses to a consultant as per the contract. So if the invoice is in the name of the person who is providing the services, then 194R will not come. But if it is vice versa, then 194R will come. Reimbursement to independent on the non-executive directors, laptops or the tabs provided for the official duties. So that will, if it in the nature of the process or profession, then it will get covered. Bad debt return of debt waiver upon the final settlement, and the loan waiver, that is waiver of loans as a part of final settlement with banks. Now in the September circular, they were given the relief to a banks if there is any haircut, that is a loan waiver, because bank is already providing a loan and they're not getting back. So it is not it is a loss for the bank. So there is no benefit. It is ultimately, if they are not able to, for example, bank has given crore rupee ka loan, they are not able to recover crore rupees ka loan. So you cannot tell the bank by waiving of that loan, you have given the benefit to that customer. If suppose it will happen, what will happen? The 1 crore bank has already lost. That person is anyways not paying a loan to a bank. So how can that person will pay the TDS? So if suppose on 1 crore I have to pay the 10 lakh at TDS, how can bank? It is a loss for a bank. 1 crore already they are written off in their books. There is a cash loss. Again, on the gross up basis, they have to pay the tax. So 10 lakh a gross up, which they will do 11.11. So that's the reason it will be unfair in the part of bank. So that's the reason they have said that whatever the haircut will be taken by the banks, it will not be treated as a benefit and perquisite, and 194R will not come. What if suppose there is a unilateral write-off? Forget about the banks. The company who's into the business, they have so much write-off that ये पैसा नहीं आएगा. 7 साल हो गया, 4 साल हो गया, 5 साल हो गया. ये पैसा भी नहीं आएगा. What would be the answer for this? Whether it will be treated as a benefit or perquisite? If yes, then why? If no, then why? So I just would like to take a pause on this and discuss like what is your thought on this. It is a unilateral write-off by a company in their books, that if this person is not paying, I am writing off in my books, whether it will be treated as a benefit or not. Any thoughts? It could be interactive, right? Hello, am I audible?
Yeah, you're audible, ma'am. Any thoughts? Actually, I have can I?
Yeah, sure.
Yeah, see, when with regard to bad debts, I mean, when you have brought up the topic, so I feel that, since bad debt as such is not a benefit or a perquisite, right? So thinking on those lines, because when you started off saying benefit or perquisite for 194R, and also you corroborated it with 28, which also talks about some income or some benefit. I mean, in those lines. So again, when we take of bad debt and then we think of section 37 also, I feel bad debt written off will not form part of any benefit or purpose. It's my thought.
Correct. Exactly correct. It is a unilateral relief which I'm exactly looking for, because the section says any person responsible for providing the benefit. So if you read the section 194 starts with that. So here I am not responsible to do the write-off at the first place. So the two limits should be satisfied. Person should be responsible to provide a benefit, and second, it should be in the business or profession to that. So of course, it is a business or profession. This transaction is of the business or profession, but the very first limb of the transaction, that is any person responsible for providing a benefit or perquisite, so it will not fall under the definition of benefit or perquisite. So it will not, the 194R will not be applicable. Your answer is absolutely right.
Thank
you. Yeah. Now moving ahead, I'm going slow, right? I'm not fast, because I'm just concerned about the time.
Perfect, ma'am. Perfect.
Yeah. So now the CBDT circular guidelines under section 194 have been issued pursuant to the powers provided to the CBDT under 194 R 2 and 3. Now 194 R2 provides the guidelines may be issued by the CBDT to remove the difficulty. Correct. Now 194 3 says provide that every guideline issued by the CBDT shall be laid before each House of Parliament and shall be binding on the revenue as well as a person providing any benefit or provision perquisite. So now this is the first time which we are seeing this, which says that it will be binding on the revenue as well as the taxpayer, the tax deductor. Now again we are abide by this, we cannot do anything. But to my mind, this should have been done away with. But still, we don't have the choice and we have to follow. So then whenever we advise the client, we have to tell them. So guidelines is in place. We have to follow that. Now coming on to the guidelines, the person providing a benefit of perquisite needs to check if the amount is taxable under 28(4), which they have mentioned clearly and true. They are not required to check whether the amount of benefit would be taxable in the hands of the recipient. So now whether it is a capital receipt or be it a revenue receipt. Okay, if it is falling under part of the benefit or perquisite, then the TDS is required to be deducted. Now, is it necessary that the benefit of perquisite must be in kind? Again, it clearly says the benefit of perquisite is in cash or is in kind. Whether there is any requirement to deduct the tax in the form of capital asset, which we had discussed already. Now, whether sales discount, cash discount, and rebates are benefit of perquisite. Now, if you see the language of the circular, it says incentives like sales discount, cash discount, rebates are the benefit of the perquisite. So, by reading it, it appears that if it is a volume discount, you are covered in this. But what if suppose you give the volume incentive, whether you will be covered or not? Again, for that there's no clear-cut answer. Still, we can say that the intention of the law was that even the sales discount and cash discount itself, the circular says that it is in a way a recipient ka income, it is in a way benefit. But just for the deductor perspective, remove the difficulty, they are saying 194(3) will not come. Again, the recipient have to pay the tax. For the volume incentive, there is nothing has been given. So, to my personal advice, DTA should be deducted on that. How is the valuation of benefit of perquisite required to be carried out? Valuation would be based on the fair market value, except in the case of purchasing and manufacturing cases. If suppose I am purchasing something 10 rupees, there is a cost for me, and that 10 rupees I am giving gift to that person. So that 10 rupees will be treated as a value of the benefit of perquisite, and TDS will be applicable on that 10 rupees. If it is a manufacturing case, so whatever cost you have incurred for that manufacturing case, that will be considered as a value of benefit of perquisite. A social media influencer is given a product for manufacturing company so that he can speak about the product in social media platform. This is a product given to such an influencer benefit of perquisite. If it is not written, then it will be treated as a benefit of perquisite. But if suppose if you are doing something and returning back that product or whatever the product you have received from that source while performing that activity, if you are returning back, then 194R will not come. Again, we discussed that reimbursement. If the invoice in the name of service were applicable, in the name of recipient not applicable. If there is a dealer conference to educate the dealer, it will not be applicable. The limit of this 20,000 should be computed from 1st April, but even though it will be applicable from 1st July 2022. So how can a person be satisfied that tax has been deducted, deposited with the government? You have to check the challenge. Accordingly, you have to report in the TDS return. This we have already discussed, so we will move ahead. So just which I am mentioning, the CBDT circular number 12 is a notification providing guideline for removing the difficulties. So the circulars are the delegated legislation and cannot override the primary legislation. So in a way, cannot override the decision of High Court and Supreme Court. The way we discuss the Mahindra and Mahindra, says the cash benefit, the cash given to as a perquisite of benefit, still it will not fall under the 28(4). So still the arguments are open. So it is not settled position. If suppose you have to advise a client, you please give both the things. And if the risk appetite is more, the client will agree. If no, then better to deduct the TDS, because if you not deduct the TDS, then the disallowances is there and are in place. This is a September circular which says that one-time settlement with the borrower whenever of loan granted on reaching the settlement with the borrowers, no TDS, reimbursement of expenses, out-of-pocket expenses which are already part of the consideration in the bill. TDS will not be applicable. Expenditure on the participant of deal or business or conference. Claim of depreciation. This is an interesting one. Suppose a person getting a capital asset. Now, capital asset, on that they are withholding the tax. Or if suppose you are offering that capital asset as a 28(4) income, so that income would become your cost. That value which you are offering for tax become a cost, and you can claim a depreciation certainly or done, which has been clarified by the circular in this. They have given some exemption for the specific organization to not to deduct the tax. Issuance of bonus or right shares, which they are saying, okay, the issue of bonus or right shares with the public are substantially interested. And once such shares are issued to all the shareholders by such a company, it will not be treated as a benefit or perquisite. TDS is not applicable. Now we will discuss the issues. Here, the DEF Limited provides the two types of coupons to its customers. One type of coupon is where the customer gets an instant discount on item purchase from DEF. And second type of coupon is where the customer can use such coupons on a later purchase from DEF and get the discount on the purchase time. So I will be purchasing, but I will be shifting my purchase later on. So I have two types of coupons. So for the instant discount offer, discount on offers in the buy one get one scheme are covered under 194R, but the circular has clarified that the sales discount or cash discount and rebates provided to customers is not covered. So for this, based on the clarification given by the circular, the TDS will not be applicable. Even it would not be applicable for the coupons offered for the buy one get one free scheme. Issue number 2, whether any benefit in kind given to a director will be subject to TDS under 194R. Now, before getting into the 194R, if you remember, there was a section of 194J, 1BA, it specifically covers any remuneration or fees or commission by whatever name called, other than on which tax deductible under 192 to a director of a company. As per the decision of the Mumbai Tribunal, the provision of 194J does not apply on the payment in kind. So that's the reason we are ruling out 194J for the amount paid to a director in kind. Now, looking into 194R, which says that provide for the withholding tax obligation or any person responsible for providing to a resident any benefit or perquisite, convertible into money or not, arising from business or profession. So now, question arises, what is the meaning of business or profession? Whether directors are undertaking any business or are exercising any profession, that we have to see. Now, business is defined in 213 to include any trade, commerce or manufacture or any adventure or concern in the nature of trade, commerce or manufacture. So, if you see, it is not forming under business. Term profession is not defined at all in 194R. So we have to refer the definition under 236, which is wider and could be interpreted to mean any profession or vocation. So now the ambit of terms profession in terms of 194R may be considered as very wide, and hence TDS should be deducted under 194R while making payment in kind to a director. Whether following marketing incentives covered within the ambit of section 194R. Now, for example, there is a agriculture business is there. They want to so for example, animal, we take the animal health products or the agriculture products. For any products, they are doing the marketing promotional inputs. They are doing their brand reminder. Now I am giving the pens, books, or the free products as a brand reminder that I am existing in market. Okay. So whether I am existing in market will be covered under the marketing promotional inputs or not. Ideally, to my mind, it should not get covered because I'm just providing the person that this is my brand, I am available in market. That person is not getting any benefit out of it. And that person is not into that business or profession at all. But I'm telling that product, you use my product. So I'm just giving as a brand the free books, free itineraries to them. So in that situation, it will not. But what if suppose that person is into that business also? So it could be possible that that person using my brand do some business activity unless I put some restriction on that. So in that situation, TDS will come. What about the print items? May or may not include the product information items or booklet. So if you remember, sometimes we get the product booklet of the companies. So whether that product booklet will be treated as a benefit. So then we have to go one step down and see whether that product booklet is giving a payment or know-how or any knowledge or any technical information to that person, and that person will be able to use into that business or not. Now, the thing is that we cannot get into those information that whether person is benefited or not. So we have to identify our product only, that whether my booklet is giving sufficient information so that other person also can do the business or can enhance my business by giving this benefit to that person. If the answer is yes, then the TDS will be applicable. But if it is ultimately a customer who is receiving this booklet, which having nothing to do with that booklet, then that TDS will not be applicable. Marketing schemes, gift card or the value discount card, depending on the scheme and target achieved. As we mentioned, if we give some targets, like the insurance companies, now for example, there is one insurance company is there, one bank is there. Okay, insurance company is giving an insurance business to a bank, saying that कि मेरे को इतना customers तुम लाके दो, bring some customers who can buy my insurance, buy the insurance policy from my company, and that manager is able to meet that target in that or the discount card. So if that manager able to do that or getting that gift card or the value or discount card, now the transaction here is three parties are involved. One is insurance company, one is bank, and one is manager who is working for a bank. I am giving benefit to a manager. Whether it would be treated as a transaction between the bank or the insurance company or not. Any food for thought on this? Hope you got my question. I am saying is A Limited is an insurance company, B Limited is a bank, A Limited is telling a bank, you please give me some insurance company, do some marketing, whatever you do, a manager will do. If your manager achieve the targets, I will give gift card to that manager. Now, the benefit has been received by the manager. Whether insurance company has given this benefit to that manager, whether 194R will come or not. Any thoughts? Am I audible?
Yes, ma'am, you're audible.
You're audible.
So it will be wrong. See, it could be that the answer would be wrong, answer would be right. So we all are here to discuss the things which the circular has come. Because if suppose tomorrow client will ask you this, then we should be aware of that. ये तो basic thing है, right?
True.
So any thought on this?
But the ultimate benefit is for the bank, no, ma'am. It's not for the manager.
Correct. So then it will come. So if you
Yes.
remember, one circular is there which says that they have clearly discussed this type of scenario in the circular, wherein they have mentioned that this manager is receiving the benefit because of the relationship
True.
between the insurance and a bank, because of the transaction between the into the business or profession of the bank and insurance company. Otherwise, that manager would have not received it. So in that
Exactly.
situation, what circular says, either that it could be possible that the 194R insurance company would apply on that, they deduct on the bank. Say for example, 1 lakh ka voucher is given. On that 1 lakh rupees, 10,000 will be paid by the insurance company, recovered from the bank, or the bank would pay the advance tax and give that challan to the insurance company, and then bank would deduct the TDS on under 192 on the manager of receiving this benefit and purchase it. Or the other option which is given by the circular is that insurance company would directly deduct the tax on that manager and pay to the government. So, but TDS surely it will come for sure on this transaction. Export incentives to a non-resident. The transaction between the resident and non-resident will be taken care by 195. It will not be applicable. Product samples not meant for sold, nor it is meant for self-consumption. It is just for the sake of it that whether this product sample is proper or not, then it will not come. Free products, if it is getting benefited to the person, then it will be applicable. Free goods ultimately to be supplied to end customer, an actual beneficiary, it will not come. Free goods are meant to be for dealer, it will be applicable. Source of goods could be anything, can be different, that is purchased from third party for free distribution or given for the inventories. It could be anything. Free goods given from the ABC inventories under CSR activities, like given to some NGO for free distribution. So if you know it is ultimately, it is not for any benefit or purpose. It is ultimately for the NGOs which will be giving a donation or something like that, then TDS will not come. Buy more, get more offer, bundle offer. TDS could be possible on that. Dealer meet and conferences, which is specifically covered, TDS will not be deducted if it is only the conference is for the product, the training purpose, then it will not be applicable. Goodies given during or after conferences, TDS will be applicable. Gala dinner or lunch, which is organized, and ideally it is in lieu of the transaction of the conference and the dealer meet, then the TDS should not come. Benefit of perquisite in capital said yes for circular 12. Now, other laws implications which I've mentioned, you have to take care of IRDA, etc., or any banking regulations. Now, the interesting question is that provision in the books as on 31st March. Now, this is interesting one, because if you remember in case of there's a Bombay High Court decision which says that if you deduct the TDA, if you deduct the TDS on the provisions or the provision of for expenses created in the books, Okay. So on that 37.1, you can claim the expenses as per 37.1, as per that Bombay High Court decision. But what if a scenario, 194R, okay, so you decided that if person will achieve the targets, then you'll give benefit to the person. So you are creating a provision of that benefit or perquisite which you will provide to that person. That event has not yet happened. That event will be happening in the later year. And you have created a provision in the books on 31st March. So whether that expenses will be allowable or not, as per that Bombay High Court, the answer is yes, you can claim the expenses. But if suppose in the next year, that person has not met the target and you have already claimed that provision for expenses, so then if you reverse that one, then you have to offer for tax that thing. But if suppose suo motu you are withholding a tax on 31st March on that provision, that you are very much sure that it will happen, but ultimately it didn't happen the next year, then in that situation the TDS has already been deducted. You will reverse that provision of expenses, but that TDS entry, there is no provisions in that in the TDS return that you will do the nullify the reversal that transaction in the TDS return, because you cannot revise, because this event will come to know after 3 to 4 months whether that person has met the target or not, and you have already filed the income tax return of that year. So you cannot go and reverse that thing, because you cannot reverse the January to March car return, and in the next year you don't have that entry, that transaction only 194 had to put that negative entry. So that is the practical challenges are there, that how to one answer is that one person may say that the challan which I have used for 194R, I will use set off against use for the other tax payment. But that form 26 years, which will be reflecting that person name, how you will redo that, because unless an entry, until you will not remove the entry from the 26, from the TDS entry, it will not get removed from 26 years. So the recipient may get face the difficulty of this type of transaction. Otherwise, because that person has not met the targets, and what income they will show, and how they came the TDS credit, even they have not received any benefit or perquisite out of that. So the challenges may arise. So just while for this 2022-23, while creating a much provision, ensure that for the related to the 194R are related TDS deductions and the 194R provisions which you are creating. You should be very much sure that you will be that person is meeting the targets. Then only you create a provision of that and the TDS apply on that. Again, this TDS return already called tax audit reporting, because here you have to report these transactions as well. In clause 34, there's one more era which will become the tax auditor, which you have to ensure that whether it was a benefit or perquisite or not, whether the other laws they have complied, it is not treated as an illegal business or the illegal nature of transaction in the other laws. So as a tax auditor, we have to not only take care of 194, we have to see each and every transaction, each and every sections before finalizing the tax audit report. Disallowances, we have to advise the client, you have to give the treatment of the transaction so that you do not face any disallowances or the penalty in that. Interest, that you are not deduct the tax on that. 206 AA and AB. Now the language of 206 AA refers to the income and 206 refers to the income paid. Here the 194R uses the language responsible for providing a benefit. They are not using the word income. So again, that higher rate will be applied or not, the answer is not very clear on that. So, but department may argue on this, whether unilateral write-off, which we have already deducted on this, or discussed on that. Claim of TDS credit as per the form 26 years, which we have just discussed on that, whether the recipient can do that. One more thing, if suppose this claim of TDS credit, I wanted to discuss one more point in that. Yeah. So while for the capital receipt transaction, for if you feel that it is a capital receipt of the person, but it is a revenue nature of your books, okay, and you feel that the TDS should not come, so it will not work. TDS credit and your expenditure treatment in the book will not go hand in hand. If you treat this as a revenue expenditure, you are withholding the TDS, and that person is not offering as an income. The question arises whether that person can claim a TDS credit or not. So that will be separate, or the discussion altogether. Uh, uh, the case laws need to be seen, whether it will be a capital receipt really, it should not be offered for the tax, but the TDS credit can be claimed or not. So ultimately, that person can claim the TDS credit, even though that receipt is not treated as offered for the tax. That was, I wanted to highlight that. Not claiming allowance of expense or benefits of where the TDS can be avoided. So if suppose you are saying that a company says, I don't want to claim this expenditure, okay, but the question arises, if you are not claiming that expenses, is whether you have a doubt whether it will be allowable or not. So whether you can avoid the TDS is obligation or not. The answer is no, you cannot avoid. If you're not claiming that as a 37 one expense or 36, any which ways, but TDS obligation you have to meet, otherwise interest and penalty consequences will be applicable. So it is irrespective these TDS provisions. First, whether the person will be treated as a recipient as an income or not, it is irrespective. You have to withhold the tax. If suppose these expenses you are not claiming in your books of account, still you have to withhold the taxes for 194R. So hope I'm very clear on this, and that's it. That's it from my end. Happy to take any question and answers on this.
Any questions? Since we are in very few, so any questions? Okay, so I shall go ahead, ma'am. So it is really a very interesting topic and a very current topic, since it seeks to plug the loopholes of tax evasion. So it seems to bundle all kinds of thing in one term: benefit and perquisite. And it really has got a very huge impact. And I'm sure that, after listening to you, I'm having quite an insight as to how to tackle this thing, especially when you're advising your clients or when you see their balance sheet. So it's a really good, insightful topic that you have really shed a lot of light on, and especially on a day of 30th November, when you are really busy, you have taken your time, and I'd really say I can understand the passion that you have for this topic. So which
Thank you.
shows.
Thank you so much.
Yeah, thank you, ma'am. Thank you for your topic. The choice of topic is really very good. Actually, you could have spoken on anything, but I can understand the passion that you have for 194R. So really, so it is really opening a Pandora box, ma'am. So whoever has not done till November, actually they are in for something. And as you said, 26 AS and the tax credit. If there is going to be a mismatch, there is another whole lot of things, that is litigation that is going to be opened up. And I think we are going to have a busy session thanks to 194R.
Correct. And I'm really happy to take another session on this at the public at large.
Yes.
And maybe I think today, 30th November, is many people would not have joined,
Yes,
and
ma'am.
they would be busy on that. And because of my throat issue, I'm not sure whether I was perfectly audible or not.
No,
But still,
you
I
have,
was trying my best.
no, you have, I mean, actually, I have learned a lot today from you. Thanks to you, I have learned a lot in 194R. I don't know. I'm sure the other people there in this group would also agree with me. Thank you, ma'am. Thank you, Jankana, ma'am.
Thank you.
Thanks a lot. Okay, so are we, we shall proceed to the next
Yes, ma'am.
speaker.
So is it okay?
Okay.
Sorry to interrupt. I can leave because I have some client calls. That's all.
Yes, ma'am.
Yes, ma'am.
Thank you. Thank you, ma'am.
Thank you.
Thanks for your time.
Thank you. And sorry, Rajlakshmi ma'am. I would like to attend your session, but I'm really struggling with a lot of time. So that's the reason. But definitely, I will once this season will get over. I will definitely listen to your session.
No worries, please.
Yeah. Thank you so much.
Hello, everyone. Myself, CA Bhakti Kamdar. Today, I got the opportunity to introduce CA Rajalakshmi Pam. Professionally, she is practicing as a chartered accountant from past 23 years. She is the first practicing lady chartered accountant in Palakkad. Qualified information system auditor. She is qualified insurance and risk management professional. She is partner of Arun and Rajlakshmi Chartered Accountants, founder, director of Amaya Professionals Private Limited, a management consulting company. She has completed her certificate courses on GST and bank concurrent audits. She is a regular faculty for CA CPT and intermediate course of ICAI, spearheaded technical sessions in various forums and workshops. She she is the past president of the CA Students Associations, past secretary and treasurer of CA Association Palakkad, member of Palghat Women's Cricket Team 1987-89, treasurer 150th Birth Celebrations Committee of Sister Nivedita, Kerala State. She is past chairperson of Sikasa of Palakkad branch of ICAI, past and first lady chairperson of Palakkad branch of Institute of Chartered Accountant of India. She is PTA president of Mercy College Palakkad, again the first lady there. Vice president of Mercy College from 2008 till today. Founder trustee of MGN Vidya Pradhan Foundation and Educational Organization, district president of Bharatiya Vidya Niketan Palakkad, patron and Nair Educational Society. She is also vice chairman of Vyasa Vidya Pidam Palakkad. So that's really, really great to introduce such a great personality. I would request, ma'am, please take over this session and give us light on the subject matter. Let's welcome CA Rajlakshmi, ma'am.
Respected Chairperson in absentia, other dignitaries on and off the screen, fellow committee members, the peers, senior members who are listening to this, a very warm good evening to you all. Let me come on to the topic immediately because we are short of time. So may I share the screen, please? Yes. Let us start the topic for the session, that is non-profit organizations, with a specific emphasis on 12A and 80G. Why the concept of charity is most important? Because it is an act of extending your love, your kindness to others unconditionally, which is a conscious act, but the decision is from your heart. But you are not expecting a reward. When charity is carried out selflessly, it's a one-way act where a person gives but asks for nothing in return. why the benefit of this charity should go to public. Because charity is essential and therefore meant to be done for the public benefit, relief, and to provide assistance to people at times of need in any part of the world, especially those who are victims of war, those who are victims of natural disaster, catastrophe, hunger, disease, poverty, orphans, by supplying them with food, shelter, medical relief, and other fundamental needs. That's why the concept of charity is the most important, and that the benefit of charity should go to the public. What is charitable purpose? Charitable purpose is not defined in Income Tax Act. It's an inclusive definition, but generally charitable purpose is defined as an altruistic thought and action which brings the objects together for a benefit of others. Charitable purpose includes, it's an inclusive definition in our Income Tax Act. It includes, as you all know, it's the relief of the poor, medical relief, yoga, preservation of environment, preservation of monuments, places or objects of historic interest, and the most controversial item, but not the least, the advancement of any other general public utility. For this, the concept of NPA got introduced. Let us see how it is also known as. Now, it is also known as non-business entity. It is also known as not-for-profit organization. It is also known as non-profit institution. Why non-business entity? Because business are generally for profits. Non-business entity, it's a non-profit organization. Not-for-profit organization, because it doesn't earn any profit. Non-profit institution, the same meaning. Now let us discuss the meaning of NPA. The organizations which do not run with the motive to earn the profits in a business, they purely run for charitable purposes. They promote culture, education, health, religious activities. For example, culture, to promote the folklore arts, to promote the traditional art forms, the dance forms, classical dance forms, they form associations. To promote education, schools, colleges. To promote health, hospitals, meant purely for the public, not for any private, not a private institution. And of course, for religious activities like Mahakumbh Mela, etc., car festivals. These are the religious activities which are undertaken by a non-profit organization. What are the key aspects of non-profits organization? The first and foremost thing is accountability. That they are to be accountable to the donors, to the founders, to the volunteers, the program recipients, and also to the public community. They should be trustworthy, they should be honest, and the organization should be open to every person who has invested their time, money, faith into the organization. Now, the words non-profit or not-for-profit, they look similar. They are used similarly, but they do have a difference. See, when you are seeking to form an organization for a simple recreational purpose, not on a large scale, ideal would be to have a not-for-profit organization. But if your goals are very ambitious, you want to create a global presence, you want to create the organization for the advancement of a social cause, a non-profit may be the ideal choice. They are typically non-profit organizations. They operate at a loss and rely heavily on the donors income. I mean, donors. The not-for-profit, they do not generate any profit for the owners. Now, the forms of different types of NGOs, NPOs, the laws behind them, and the regulatory bodies. What are the applicable forms? We can divide them into 4: trusts, society, Section 8 company, and an autonomous body functioning with the government aid. Which are the laws applicable to them? For societies, it is Societies Registration Act 1860. For trust, Indian Trust Act 1882. For Section 8 companies, it is Companies Act 2013. For, of course, all the taxation aspects of non-profit organization are governed by Income Tax Act 1961. If the donors are from foreign, if the amount is received, if the contribution is received from the foreign sources, then of course the non-profit organization should also abide by the law of Foreign Contribution Regulation Act. Then the format of accounts prescribed by the Ministry of Finance. Here, the non-profit organizations would be given government grants, or for some institutions, government will be giving some grants for their projects. Then it has to adhere to the laws applicable as prescribed by the Ministry of Finance and Government of India. Who are the regulatory bodies behind them? Of course, accounting standards as applicable prescribed by ICAI, Indian Government Accounting Standards, Indian Government Financial Reporting Standards, Indian Public Sector Accounting Standards, and of course, accounting for the local bodies. Now, based on the based on around 12 criteria, we have to select the nature of the form of NPO. It depends on the 12 characteristics, just as I've listed out here. Depending on the size, depending on the legal requirement, the initial cost involved in forming the NPO, the recurring cost that will have to be maintained throughout the functioning of NPO, what are the compliances required for the NPO, whether we should go for a corporate structure, what should be the number of persons, how many persons are there, or what should be the number of persons required to continue the organization, what is the general trend of the NPO, whether we are going for a global appearance or whether we are restricting ourselves to a small area, what are the advantages and disadvantages of this for having this organization, what are the characteristics of the organization, what are the activities of the organization. These 12 categories, 12 principles are basically selected and basically included in the selection of the forms of NPO. Depending on the size, legal requirement, initial cost, my suggestion would be to have a trust formation. But if the number of persons are more, for the trust and the Section 8 companies, 2 persons would be enough. But for societies, it should be more than 7. So the number of persons requirement, we can go for societies. So it depends on these are the governing principles for that. Now, a trust. A trust can be constituted by a simple deed of declaration. This deed of declaration is made as per the wishes of the author of the trust for the accomplishment of the objects of the trust. Now, the trust deed to be registered with the jurisdictional register. The trust can be private trust, public trust, charitable trust, religious trust, or charitable cum religious trust. Now, as far as the taxation aspect is concerned, religious, charitable, and charitable cum religious trust, they are entitled for registration under Section 12A. However, religious trusts are not entitled for registration under Section 80G. Now, what about the second one is the society. Now, what is a society? It's an association of persons who come together by mutual consent to act jointly for a common purpose. Any 7 or more persons, by subscribing their names to the Memorandum of Association and filing certain documents with the Register of Societies Act 1860, can they get their society registered. Now, the certificate issued by the registrar is an evidence of the registration of the society. This certificate is very important because this certificate is used for the application for approval of registration under Section 12A 80G. These certificates are these are being asked by the department. Now, Section 8 company, it can be formed as a one-person company or association of persons, but has in its object the promotion of commerce, art, science, culture, education, research, social welfare, religion, charity, etc. But the profits are to be applied for only promoting these projects, and it intends to prohibit the payment of any dividend to its members. Now, let us move on to the next topic, that is the taxation of NPOs under the provisions of income tax. Now, normally, generally, we say the NPOs are exempt from income tax. Why so? Because They are done mainly to encourage the charities for the underprivileged sections of the society. As our Prime Minister says, sabka saath, sabka vikas. The NPOs are considered more effective and efficient for promoting the welfare of the society. Though there are several departments in the government sector for considering the underprivileged sections of the society, we are not sure whether it is reaching them properly. So it is the NGOs and NPOs which do this, which is doing this for more effectively and efficiently for the welfare of the society. Again, the cooperatives and NPO sectors, they are governed by the provisions of Income Tax Act that we have already seen. Now let us move on to registration of NPOs under Section 12A. Under the new registration regime brought in by the Finance Act, the concept of perpetuity has been done away with. All the existing charitable trusts or institutions registered under Section 12A, 12AA, and Section 80G have to apply afresh for registration under the new provisions of Section 12AB on or after 1st of April 2021 to 31st March 2022. Now, this registration should be done with the CIT exemptions for getting the benefits of income tax exemption, and it should be filed in form number 10A. Now, what are how the filing of form 10A can do this? The new rules and forms will be applicable from 1/4/21, and that should be done before 31st March. Then already registered firms in under 12A, 12AA, ATG should apply for the reapproval, revalidation by filing form 10A. Then the renewed registration will be valid. That is already registered for trust and institutions. Their validity will be for 5 years. That is from, if you are applying it on 1/4/2021, your validity will expire on 31/3/26. And before the expiry of 31/3/26, that is 6 months from the expiry of 31/3/26, that is 30/9/2025, we have to apply again in 10AB and get the renewal. And however, in the case, this is for the permanent already registered 12A, 12AA, ATG institutions. But if you had applied afresh after implementation of this new registration scheme, the registration will be provisional for 3 years. This provisional registration has to be made permanent before expiry of 6 months or 6 months from the commencement of activities. The renewal of registration should done for every 5 years, and also for ATG also 5 years. Then there was an option for us to claim 12A as well as 1023C as per in the provisions. But now the benefit of 12AA, 1023C and 1040C cannot be claimed simultaneously. It can only one exemption. And for all purposes of identification numbers, it will be allotted, and at 12AA, ATG, all, they will have a 16-digit alphanumeric number. Now, what is Form 10AB, where it is used? Conversion of provisional registration to regular registration, 10AB is used. For renewing the registration or approval after 5 years, 10AB is used. And you can activate your inoperative registration under Section 1023C or 1046. You can use Form 10AB. Also, to use for the re-registration for modification of objects. There was no form available till date to re-register your objects, a modification of objects with the department. We simply write a letter to the department with amendments to get the approval. Now it has come as a 10AB. So we have to fill in 10AB to get the re-registration done. Now, for the due dates, as I've already explained, provisional registration to regular registration before 6 months of expiry or 6 months from the commencement activities, whichever is earlier. Then renewal of registration or approval after 5 years before 6 months of its expiry. Re-registration within 30 days from such modification of objects. It has to be looked into. So whenever there is a change in objects of the trust already been given the 12A registration, it has to be immediate within 30 days. We have to file Form 10AB. Otherwise, there may be a chance of cancellation or suspension of 12AB registration. Now, for applying ATG also, the erstwhile provisions was Form 10G. It has been done away with now. Same set of amendments have been brought into Section 80G registration. The existing trust or institutions will have to apply for fresh registration under subsection 5 of Section 12AB. In the same manner, subsection 5 of Section 80G, in the same manner as applicable in Section 12AB. That application also should be made through form number 10A or 10AB as may be applicable to the institution. Now, what is the Form 10AC? This is a order of registration from the Commissioner. We will get provisional registration approval or a pre-validation registration or a reapproval through this Form 10AC. This Form 10AC is important because you will have a unique registration number in this. Also, this Form 10AC should be submitted along with the ATG application to get yourself registered under Section 80G. Now, let us look at the due dates. Already, due dates are in 21-22. The original due date was for filing form number 10B. That is applicable to 12A 1B cases. It was 30th September. Later on, extended to 7th October. And for 1023 cases, that is annual receipts of the institution crossing 5 crore. The institution will have its annual receipts above 5 crores. They have to file form number 10BB. That also to be filed 1 month before the due date of filing. This year, it's already over. Next year, we will have to check the dates and do the same. Now, what are the conditions for the exemptions under Section 11? The creation of the trust or institution must be wholly for charitable or religious purpose. The trust should be registered under Section 12AA or 12AB as the case may be. It shall not be created for the benefit of a particular community or a creed or a caste. The creation of the trust should not be for carrying on the business for profit. Then the trust property settled under the trust and income not to be covered under Section 60 to 63, wherein it is said that the property is not getting transferred, whereas the income is getting transferred. The objective of the trust to be charitable as per Section 215. Income to be utilized for charitable purpose in India only. There should not be any violation of Section 13. That is, the beneficiaries should not be the own trustees or members. Profit cannot be distributed among beneficiaries. Audit should be under Section 12A for the trust if the turnover exceeds 2.5 lakhs before claiming section, and audit report should be filled and filed. The trust or institution should be either wholly for charitable or wholly for religious purpose. Then the trust created for charitable and partly for religious purpose shall not be eligible for the beneficial provisions of Section 11. Further, where a trust and institution is formed with its predominant object being both charitable and non-charitable, the said trust or institution again will not be eligible to get the beneficial provision of Section 11. And also the organization should spend 85% of its income in any financial year on the objects of the organization. The surplus income, it can be accumulated for specific projects for a period ranging from 1 to 5 years. The funds of the organization should be deposited as specified in Section 11.5, which will be dealing later. Then no part of the income or property of the organization may be applied directly or indirectly for the benefit of any founder, trustee, relative of the founder or trustee, and also a person who has contributed in excess of 50,000. That is, who has made a substantial contribution to the organization in a financial year. And of course, the organization must file its annual income tax return on time. Then the trust income may be applied outside India to promote international causes in which India has an interest without being subject to income tax. Now, what are the applications of fund? As per section 11.1, at least 85% of income should be applied in the previous year for the purpose of the trust. What are the statements to be furnished towards this accumulation? There will be two situations. One situation would be the income will be due, but would not have been received in the previous year. Then the statement to be furnished will be form number 9A. The second situation would be the funds would be ready, but the project would not have taken place. Started. It would not have commenced, and they would say be setting apart this for any other in 5. They would be completing it in 5 years. Then we have to file form number 10, wherein it has to be mentioned the purpose of the setting apart, purpose of accumulation of funds, and where you have deposited. These things are to be mentioned in the. Now, what do you mean by application of funds? Revenue expenditures applicable to the institution, that is all the expenses incurred for the objects of the trust will come under revenue expenditure. Also, the administrative expenses that are incurred for meeting such objects, but the incident to the objects will also be coming under revenue expenditure. Of course, the purchase of fixed assets, capital, it is termed as capital expenditure. Where there is any loan taken against this fixed asset, then this loan will be reduced from the cost of the asset. That the net amount will be shown as the application of income. But you can show the repayment of loan as application of income if you have reduced that loan and that while taking the purchase cost of the fixed asset. Payment of any taxes can be taken as an application of fund. Voluntary donation to another trust also can be taken as an application of fund. So this is section 11. We have already discussed, subject to the provisions of section 60 to 63. What is section 11 says? Income derived from the property held under trust, wholly or charitable or religious purpose. Application should be in India, and application option should not exceed 15% of income. Now, next we move on to the corpus donation. Meaning of corpus donation. According to section 11.1, any voluntary contribution received by the trust, created wholly or for charitable religious purpose, with the direction that they shall form part of the corpus of the trust, that to be included in the total income under it need not be included in the total income under section 11. To claim this donation as a corpus donation, a written document with a specific direction from the donor should be obtained. The recipient organization has no right to treat this donation as a corpus donation, which in practical cases, I don't know whether it is possible or not, but to claim the donation as a corpus donation, a written document is a must. A corpus donation is not required to be spent in the same year, and it can be accumulated. But we need not file form number 10 as it is not treated as an income. But it should be invested in the investment as the mode specified in section 11.5. The limit of 85% is also not applicable in corpus donation. Once you have received amount for corpus donation, it has to be applied for corpus, that purpose only. So there is no applicability of 85% or 15% in the case of corpus donations. The Finance Act 2021 has provided that the corpus donation should be remained invested in a manner and in the form as provided in the section 11.5. If not, to that extent, it is deemed to have been applied. So it cannot be claimed as applied if invested subsequently in prescribed mode under section during that period temporarily as an application. Now, next topic is anonymous donation. As you all know, in order to tax the money laundering, unaccounted money being contributed to charitable institutions, misusing the very purpose of having that non-profit organizations, some miscreants creating havoc to the organization. In order to curb that, a new section has been inserted so as to provide that any income of anonymous donation shall be taxed at straight away 30%. So it is always advisable to have the KYC of the donor with the organization. It is also advisable for our auditors to check to verify whether the address, name, whether the donation form part of actual receipt as sources of funds, or whether it is anonymous or not. It is a role of the, it is a duty of an auditor. Then these are the situations where the anonymous donations are taxed. Any institution referred in section 11, universities, hospitals, any funds or trust in 1023C, 1023C, all are taxed under the anonymous donation is at 30%. Now, investments or deposits in the mode specified in the section 11.5. This is again a big section wherein the department and the Income Tax Act provides for the modes of investment you have to make for availing the exemption. That is, while filing form number 10, we would be entering the mode of investment like fixed deposit, savings certificate in any post office savings bank, deposit in a scheduled bank, UTI, central government securities. They have listed out so many modes of investments in under section 11.5. Next topic is ATG, of course, a facility available in the Income Tax Act, which allows the taxpayers to claim deductions for various contributions made as donations. See, this deduction is available for contributions specific relief funds and charitable institutions also. Now, the duty of the donee is that they should compile a list of all donations received, and they should file it online for claiming ATG deduction by the donor. This has to be done in form number 10BD, wherein the statement of particulars that the donation received by the donor, statement of particulars of donation received by the donor to be filled, and this has to be done before the 31st of May every month, every year, beginning with the financial year 2021-22. So the 10BD should contain the unique identification number of donor, the ID of the donor, that is voter's card, PAN number, voter number, or Aadhaar number, anything that is ID code of number, donor, section code, whether he is eligible for ATG or whether he is eligible under section 35, name, address, what type of donation he has made to the organization. Is it corpus? Is it specific? Or is it even corpus donations are to be shown separately? And of course, the mode of receipt should be shown if it is cash, kind, electronic, or other modes. It has to be specifically mentioned, and this has to be compiled. And if there are two or three donors, a very small organization, we can do it online. But if there are number of donors, and then we can make it as a CSV file and upload it to the department, to the income tax site. I think we can also file an additional set of, if we are not able to find out all the sets, all the details in one shot, we can do as different sets to the, we can upload to the AE portal. Now, on filing 10BD, department will allow us to download the certificate of donation, will allow the non-profit organization to download the certificate of donation under section 80G or in section 35 as may be applicable. And this will make the donor eligible to claim his donation under section 80G. Now, the scientific research organization and research development organization, university associations, rural development and conservation, the donation to these areas are under the provisions of section 80GGA. Similarly, 80GGC is some contributed to the political parties or elected trust. These also the direction of proclaim mode paid through any mode other than cash, they're eligible for 80GGC. Now, ITR 7, which is the return for filing the trust organizations, institutions registered under section 12A. There are certain relevant sections which I have just pointed for your easy reference. Section 139(4)A. It normally income derived from property held under trust wholly or partly for charitable and religious purposes. We take section 139(4)(a). 139(4)(b) for the chief executive officer of every political party. Then 139(4)(c), various entities like research organizations, research associations, news agencies, etc., which is mentioned in section 10. 139(4)(d) for universities, colleges, other institutions referred in section 35 and 1023(c). Now, how the charitable institutions cease or convert to a non-charitable trust? What are the relevant sections with respect to that? Sections 115 TD to sections 115 TF have been inserted with effect from 1/6/2016. This section provides for a levy of additional income tax in the case of conversion or into merger of cessation or any non-charitable form or assets of a charitable organization on its dissolution as a to a non-charitable institution. And what is what is the meaning of accreted income? The accreted income means shall be the amount of aggregate fair market value of all the total assets as reduced by the liability on the specified date of accreted income, which we will be dealing in the next portion. That is date of conversion, merger, or dissolution. That is a date of conversion. The date of then the mode of valuation also to be notified. That's the meaning of accreted income. The time of accretion of income will be on the conversion of the trust or institution into a form of non-registered or converting into a non-charitable form. Then their income will come. Merger into an entity not having similar objects and which is not registered under section 12A also will make the non-charitable institution non-charitable. Also, non-distribution of assets on dissolution to any charitable organization registered under section 12AA or approved under section 1023C within a period of 12 months for dissolution. Here, normally the deed or society, there will be a binding up or dissolution clause wherein it would be mentioned that on dissolution or winding up, all the assets of the institution after meeting its liabilities would be going to either government or similar institution registered under 12A or ATG. It would be mentioned. If it is not met within the period of 12 months, also this accretion of income will arise. Deemed conversion, for the above purpose, a trust or institution shall be deemed to be converted to any firm not eligible for registration if the registration granted to it under 12A has been cancelled. And I had mentioned earlier, if 12AB, if 10AB is not filed within 30 days from this year onwards, if 10AB is not filed within 30 days after amending the objects, and then there also this deemed conversion would be applicable. Now, I'll just briefly touch upon the recent changes in the budget as we are nearing my time. Recent changes in the budget is corpus donation by one entity to another entity shall not be an application of income from current year income. That's a recent change. Then the modification in objectives. A fresh application has to be filed that we have already discussed. Then payment exceeding rupees 10,000 is to be treated as an application of fund under section 40 is not to be treated as application of fund under section 40A3. This was not there. This was only for the profitable profits and gains in profession, that is business entities. It has come to non-profit organizations as well. Now 48(3)A also says any liability for such expenses cannot be paid in cash above 10,000. This also will get dissolved. It will not be treated as an application of income. Now TDS provisions will be applicable to NPOs, and if the return of income is not filed within 10, the exemption may be maybe cancelled or suspended. Then the cash donation exceeding 2,000 is not eligible for exemption under section 80G, and as per section 56(2)(x), property or money received by any person for a consideration exceeding 50,000 to be the income of the recipient. These are the recent changes in the budget. With this, I think, let me close my presentation with a very big thank you to WMEC, headed by none other than the smartest chartered accountant, the most admired lady in our profession, C.S. Sri Priya, and fellow committee members who are instrumental to set the stage for the empowerment of lady members. Thanks, Ms. C.A. Jaya, who was coordinating with me, and of course, dear friends in my profession, thanks to you too for your interest and attention on this topic. May God bless each one of you to have a successful balance of your career and your family. And let me share one of my thoughts with you and bid goodbye. Success occurs when opportunity meets preparation. If you're open and flexible, you will have opportunities that you never thought of. You need to keep the sails open and wait for the wind to blow. It's a thought by Stephen Covey, which I found it very apt for the situation in my case. With these small thoughts, I remain. Thank you all. Thank you very much.
Up a few questions we have here. So the first question is new approval valid for both 12 section 12 AA exemption and to claim 80G deduction?
You have to apply for both.
So we have to apply for both.
Both.
Yeah. 1 minute, ma'am. The another question goes like this. A trust has given to another trust towards corpus. Can it be treated as an application?
From this year onwards, there is a change in the change in the budget that I've already mentioned in the slide. It cannot be treated as an application of fund.
Okay, ma'am. Whether corpus funds received should also be filed before 31st May every year?
Pardon?
Yeah, so the question is whether corpus funds received should also be filed before 31st May every year?
Yes. All donations, corpus specific, all donations should be, you mean Form 10B, BD? Probably they would have meant that form. Yes.
Which ITR form to be filled for gratuity superannuation trust by corporates?
If they are having a 12-year registration, it is ITR 7, otherwise ITR 5.
Okay, ma'am. I hope everyone are cleared with all their doubts. So there was an excellent coverage to the topic of donation and 80G, ma'am. It's my privilege to have been asked to propose a word of thanks to you, ma'am, on behalf of entire team and fraternity with deep sense of appreciation. I would like to thank you, ma'am, for your time to share such insight knowledge on the subject matter. We definitely enriched our knowledge here after your session, ma'am. Thank you very much once again. Thank you very much, everyone.
Thank you.
And thank you very much, CA ma'am, Preeti Savla ma'am, and the entire team to have such a lovely sessions every Wednesday.